I'm Andrew Constantinides, a certified financial planner with Neil Jasani Wealth. One of the primary programs that investors, advisors, clients were really looking for out of the new Trump administration was an extension of opportunity zones. And we got it, kind of. Not exactly what we want, but we got some format of it. If you're not familiar with opportunity zones, they were part of the original 2017 Trump tax cuts, which essentially allows for the deferral of a capital gain. Now, initially in 2017, you were able to defer that capital gain out until 2027. And the way that it would work, let's say you have a capital gain either in a property or even a position in a concentrated stock or a group of stocks with a large long-term capital gain embedded into it. What opportunity zones allowed you to do was sell that stock, realize the capital gain, and put the proceeds into an opportunity zone and not have to recognize and pay capital gains tax on that gain for that year, essentially deferring it in this new investment in the opportunity zone. What opportunity zones actually are, they're areas around the United States. There's a couple hundred of them that the government has defined as areas that are ripe for development. So areas that they want to see developed either into residential, commercial, office space, industrial, and the government gives developers some pretty significant tax incentives to build projects in those specific areas. So as an investor, you're investing through a developer into this real estate development project, and you're able to generate some tax efficient income from it and continue to defer that capital gain in the new real estate investment. What everyone has been concerned about is that if you invest in an opportunity zone in 2017, 18, 19, 20, 21, your deferral ends at the end of 2026. So you're going to have to go back and pay capital gains on that original investment. So what everyone was hoping for is an extension of the current opportunity zones, meaning that anyone who did an opportunity zone from 2017 when they first became available until today, where those deferrals right now expire on December 31st, 2026, they were hoping that that would just get extended. And anyone who already has those investments would just be able to hold them and continue the tax deferral. Instead, what we got is basically another round of opportunity zones. So starting on January 1st, 2027, after the deferrals on the first round expire, there's going to be a new set of opportunity zones. New investments can be made, and you can defer that tax until 2033. So it's a little bit shorter time period than the initial ones, but you're still able to solve for some capital gains, whether in real estate or publicly held securities or really any type of long-term capital gains. Push it into a real estate investment, get some tax favorable growth and income, and defer that initial capital gain. So opportunity zones were a really great way, especially in the early years of them, 2017 to 2019, to defer taxes on an investment. As we've gotten closer to that 2026 deadline for the first set, they've become less attractive because now you're only getting, a year of tax deferral. So the good news is a new set of opportunity zones, maybe for 2027 or 2028, you're going to get that deferral to 2033. So it's kind of back on the table as a viable strategy to solve for long-term capital gains within your investment portfolio. So if you're looking to take advantage of opportunity zones and learn more about them, feel free to reach out and give us a call. The most important thing is the developer in the opportunity zone. It's a government program, so obviously a lot of fly-by-night providers and developers have popped up saying they're going to manage and create and build out properties in opportunity zones. It's really important that you just go with the best developers, someone who's been around 20, 30, 40 years developing properties with a name that you recognize, and we can show you a couple different options that might fit that need.